Hello guys, welcome back. In this video I'll be talking about gold, and as usual I will start the analysis from monthly time frame and work it down to daily time frame for us to know the possible direction where price would go. And as we all know that this week we will be having some major news event like PPI and CPI, and we will start the analysis so that we can know the direction where the price can be driven to. Okay, here in the monthly time frame, what do we see? Here in the monthly time frame, we can see that gold is currently testing, or gold is still testing the previous resistance level. We can see that here price tested it the previous time, gave rise to this drop, tested it the second time, and now price is still there for the third time. And also of recent we discovered that there have been some rejection at this zone. You can see price have been getting rejected at this zone lately. That means that buyers are doing what? Are losing interest in continuing the position, because buyers or the market has been bullish all this while. From here price has been bullish, so at the moment the price is now trapped in between the seller's zone. So investors are now panicking, and also most of the traders that were holding long positions are now doing what? Taking off their positions at that zone because of panic. They don't know whether price would continue or possibly drop from that level. So at the moment all we can see is rejection at the resistance level. And if we observe this week, or sorry, if we observe this moon candle closely, what do I mean? This candle. If we observe this candle, here, which is the present moon candle, we can see how price is getting rejected. There are so many weak formation at the moment, so price is still finding it difficult to stay above the previous monthly resistance. So let's now drop down to our weekly time frame to see what the market is actually doing. Here in the weekly perspective, what do we see? Okay, in the weekly time frame we can notice how price have been bullish all this while, making higher high, higher low, a break of structure to form a new higher high. So we notice that after the break of structure, after the previous weekly resistance was broken and retested at this level, we've seen that price have been doing what? Consolidating at this zone. Price has just been ranging. Price has just been ranging at this level. So, and as price is currently ranging, there could be a possible drop from this level. There could be a possible drop from this level. But before then, we see how previous week candle closed. We see that the previous week candle closed above the other week high. That is, the previous weekly candle traded with some percentage of buyers in the market and some percentage of sellers in the market. We can see how buyers tried to push the price above the monthly resistance level, and all of a sudden there was a selling pressure that was exerted, and it led to the rejection of price to the downside. So our previous weekly candle, the previous week candle had a 50% buy and a 50% sell. What do I mean? We can see how buyers entered the market from this zone, then traded all the way to 2060 psychological level. Then on reaching that zone, sellers pressure was exerted on the price, and it led to the massive rejection that happened and made price to close at where? At 2016 psychological level. So as at previous week, what we had was some percentage of buyers and also percentage of sellers. So the market bought and tried to break above the monthly resistance, but all their effort proved abortive, and it led to the rejection back to the resistance level. So here now in the weekly time frame, we are having a 50% buy chance to continue and 50% sell chance for a drop. So let's now drop down to daily time frame and see what the price is actually doing. Here in the daily time frame, what do we see? We see how price has been ranging at this level, trading in form of what? Channel. And all of a sudden, price picked a momentum as at last week. From the start of last week being from the start of Tuesday, market picked a buy momentum, reaching the price of 2060. Where do I mean? Here, reaching this zone, which is the resistance. We discovered that price started rejecting to the downside. So as of last week, what do we see? We see that the price made a bullish move and a what? Correction. So generally, after an impulsive move, we normally measure the correction. So picking our Fibonacci tool to measure from the lowest point to the highest point, what do we have? Here is the lowest point that the price picked momentum. So placing our Fibonacci level at the highest point, what do we see? We discovered that the correction stopped where? The correction stopped at the area of 61.8 Fibonacci level. Where do I mean? This is where the correction stopped. So if we extend it to the left side, what do we have? We see that the price closed just at the broken resistance, which now turned support. That's where the price stopped. So and as the price stopped at area of previous resistance, that still shows that buyers are still gaining, or buyers are still in the market. So there could be a possible buy continuation from this level that the price is. So we discovered that or we've seen that the price closed above a broken resistance. Here is a broken resistance. You can see that for past few days now, price has just been rejecting this zone. Price has been trading below the area of 2000 psychological level. Where is the area of 2000 psychological level? Here is it. You can see here is 2000 psychological level. Or I can just bold the line. This is 2000 psychological level. So we can see that the price has been doing what? Price has been rejecting to the downside from that zone. So all this while that price has been trading below the price of 2000. All of a sudden last week we discovered that the price finally broke above the resistance level, and on retracement, the retracement stopped at where? At 61.8 Fibonacci level, which is the place which is this zone I highlighted with the rectangular box. So what do we do next or soon as market opens? What we will do is to monitor price for a change from this correction, which would be on intraday bearish market toward intraday bullish market. So we would be looking for an opportunity to go long in the market. But before we make a conclusion, we need to go to intraday time frame to see what exactly is happening at that level. Now, dropping down to our intraday time frame, H4. Here we are in the H4 time frame, and what do we see or notice? Okay, here in the H4 time frame, everything seems quite interesting. Here we notice that after a break out from the resistance level, here has been a resistance level. All these places have been the resistance level, and all of a sudden we've seen how price break above, retested that level, and made this impulsive move. Again, when the NFP news was released on last week Friday, we see how the price was driving back to the resistance level, and not just coming back to the resistance level. We noticed how there was a rejection. Although on news day being Friday, I predicted in my previous analysis that once price gets to price of 2000, that I'm going long. And just as I analyzed, price touched the 2000 psychological level and gave rise to this massive buy that counted 160 pip away from the resistance level. So and as we can see, price has already done what? Price has already found a support at the area of what? 2000. And after the market moved away from the support level, we also discovered that there is a rejection at the moment. So now what do we expect the market do? Okay, on Monday now, what I will be expecting in the market is since the price has tested the support zone buyers are now venturing into the market again. So on Monday, once I notice a break above 2020 psychological level, because at the moment price is approaching a resistance level. Price has resisted this price level before, as of last week, and price is now there for the second time. So all I expect the market do is to break above, give a retest to 2020 psychological level, and I will go long. So I will be looking for buy opportunity at which zone? I would be looking for buy opportunity once I see price break above 2020 psychological level, which is here. I would be looking for opportunity to buy once I notice a price break above this 2020. So on retest to that same zone in this H4 time frame, I would be looking for what? Buy opportunity. So until I see a price break above 2020 psychological level, I'm not interested in the buy, even though buyers are already sitting in the market. So the whole of this level now, sellers can decide to do what? Dominate the market, because the retracement we had in this H4 time frame is 100% retracement. The retracement we had in H4 time frame is 100% retracement. Remember that H4 time frame is trading time frame, is intraday time frame. So I will reach my trading decision based on what is happening in H4 time frame, because here now I can see that the price made an impulsive move from the price of 2010 to where? To 2060 at this level, and price was driven back to that same level, to the support level. So whenever a price makes what we call V pattern, this is what they call V pattern, an impulsive move, or an impulsive move to the upside and also impulsive move to the downside, it shows what? Neutral level of the market. So now, and in this case, what you could expect is what? Either a pullback and further continuation to the downside, or a what? Or you can notice a what? A retracement, a higher low formation, and the continuation. So at the moment, what we have is what? An impulsive move to the upside, impulsive move to the downside, a retracement. So this could be a formation of lower high. It could still be a what? A consolidation for more bullish price action continuation. So at the moment in this H4 time frame, what I would advise you do is to watch closely at the area of what? 2020 cycle level, which is this level that price resisted before and gave rise to this retracement. So price is there again. So if you notice a break above on retest, go long. Then if price fail to break that 2020 cycle level, that means more bearish price action could be experienced in the market. That is, we could expect more bearish price action to continue moving down. So at the moment, what I should be watching out once market opens on Monday is a break above 2020, then I will buy. If I don't see a break above 2020, I'm not having any bullish opportunity in the market, or I'm not taking any bullish opportunity. So I would only be looking for buy opportunity when I see price break above this 2020 cycle level. So here is where I would be watching out. Here is where I would be watching out for buy opportunity at this 2020 level here. So if I see a break above here, I can go long. But if I don't see that, then I will still short the market, because in H4 time frame, price is still in very much bearish trend. And also, keeping aside the 2020 cycle level, if I still notice a deeper retracement back to this 2020 without breaking it, I will still do what? Go long in the market, and that would give rise to what? Double bottom. So if I don't see a break above 2020, I would still be looking for more buy opportunity at area of 2000 if price eventually fail to break it for the second time. So if price is coming to test it for the second time, I would be going long all the way from here. And if price decide to do what? If price decide not to come and test it for the second time, and I see a break above 2020, I would still be going long in market. So in summary of our analysis so far now, where we have our key level very intact is still at where? At the previous broken resistance, which now turn support, which is what? Here. We still have this level very intact. So if I don't see a break below 2000, I would still be looking for buy opportunity in the market. Thanks for watching.